Hello, today is Friday, the 21st of November, 2008, and this is Brian Shannon from AlphaTrends.net. We had a pretty good close here today, but obviously for the week, the market just got smashed. The NASDAQ 100, the Qs finished down just about 8% on the week. Today they rallied 4.3%, so still a horrible week within a terrible downtrend. Obviously, the sellers are clearly in control of the weekly, the monthly, the daily time frames, etc. But when we start to look at some of the shorter term time frames, there's a little bit of signs of encouragement, but nothing to get overly excited about. We've had this pattern here on the 10-minute time frame of these lower highs and lower lows that I'm outlining right now. And obviously we saw today another push lower here, and then late day we saw a higher high. What we need to see to begin the rebuilding process before we can really start to get too excited about any rally attempt is a pullback, make a higher low, come up and test and get back above that declining 5-day moving average, see that 5-day moving average flatten out, and then begin to rebuild. There's still a lot of work that needs to be done. All the downtrends are clearly still intact. On the weekly, for the week, basically, we broke this support from middle of last week. That support did act as resistance. We're clearly well below it right now. That's at about 27.5 or so. That's also where we see that 5-day moving average. The encouraging sign here is this big volume, but again, the bottoms are a process. They're not an event. Perhaps we can look back and see that these will be the lows, and it's up to the market to decide where the bottom is, where we should, how long we should hold on to any rallies. For me, I continue to believe that rallies should be traded on the long side, but traded aggressively, and basically that means day traded. The market gapped lower today. It was just a real chop fest in here. The sellers took control, pushed those new lows, and then we saw an announcement from Obama that as far as who his Treasury Secretary will be. That I guess was the excuse for the rally here this afternoon. The market did make it past that daily VWAP on some pretty heavy volume too, and then relative to that, the pullback came on lighter volume. So what we want to look at is not the volume for the day, but relative to the event. The event is we saw this big rally. Relative to that, we saw a pullback on lighter volume. We saw another push higher on big volume, a shakeout in here that actually brought it down to below that 2-day VWAP, but also to this prior level of resistance that had formed earlier in the day, and then we saw a continued push higher. So here's where this prior resistance acted as support on that pullback. Very choppy trading. Best left for the most skilled traders. These rallies are very seductive to look at and think, wow, look how much you could have made. But again, we're in a downtrend, and we've had a lot of big rallies in this downtrending market, and pretty much every one of them has failed. This one may turn around and turn into something more sustainable. Again, it's up to the market. We're certainly deeply oversold here and due for a bounce, but we've got these this prior little support level that gave way this week up near about $28. So I think $27.5 to $28 a share on the Qs is going to be an important level next week. If we can get back above that level and then hold above there for a day or two, this may turn out to be a big bear trap that leads us to a rally, perhaps up to the declining 50-day moving average. But I don't want to put these bullish scenarios out there. We need to let the market, give us more evidence that that it can hold on to some of these gains and continue to move higher. Oil was up today. Everything was up today. That's the funny thing is that all these markets came down together, and now that for one day so far they're all up. Still nothing to indicate that this trend, that this downtrend has been broken on the daily time frame, on the 10-minute time frame, anywhere. So oil remains in a downtrend. It will be the recipient of bounce rallies, but it's still guilty till proven innocent. Gold was up early today, and gold, you can see it gapped higher and continued to rally. And the people on television were saying it was a flight to safety, but on a day when the Dow Jones is up 500 points, and the S&P 500 is up 6%, it's hard to say that it's a flight to quality. Honestly, when it comes to gold, I'm terrible at trading gold. I believe gold is still in a primary downtrend. Looking at this weekly time frame, we've clearly got lower highs and lower lows. On the daily time frame, we've rallied up to this declining 50-day moving average. And the problem for me with gold is that it gaps up or down just about every single day because it's traded 24 hours. I think that I'm going to actually discontinue talking about gold from here because I'm not sure that my comments are helpful. It's in a downtrend. I don't trade it. It's bounced from this prior level of resistance, and that concludes my my career in gold commentary. So let's take a look at the Russell 2000. I'm much better at equities, so you've got to know what you're good at and stick to it. The Russell 2000 showed a nice increase in volume. It bounced, of course, as well, up 5.5%. Clearly still broken, deeply oversold here the last couple weeks. For this week it was down 10%. For the month so far, down 24% month to date. So it's due for a bounce, but so far we've got to look at it as a rally within a downtrend. We saw a tightening of range in here, and then a cleaner move actually for the Russell 2000. Let's take a look at the 1 minute time frame. A cleaner move past that resistance level. Once it broke past the daily VWAP in here and then that resistance, we saw the same thing. Big volume move, which is kind of skewed by this volume right here. You can't really tell, but there was a nice surge in volume followed by a pullback in volume right there, and then the rally, the pullback, and then the final thrust higher into the close as it pushed past that 2-day VWAP. For the week, obviously it's still in a downtrend, and looking at that 10-minute time frame, we've got this is going to be an important level, 42 to 42 and a half. We had this prior support in here. We had a little bit of resistance up near 42. We're going to see that 5-day moving average coming down towards it. So perhaps it's the beginning of something, but we need more proof from the market. You can't just get excited about a one-day rally. The semiconductors were up 5% here today, up 74 cents, and volume wasn't quite as heavy as yesterday, but that's not a huge reason for concern. The biggest thing is, of course, that we're still in a primary downtrend. This group was the first one to go to those 12-year lows that I had pointed out earlier in the week by going down towards the 1996 levels on the SOX, the SOX. But here on a 30-minute time frame, downtrend clearly still intact. We've got this is an important level up near about 16.75, $16.80 to $17 a share for the semiconductors. Still a great trade up to that level if it can make it. So we're in a bear market. We're experiencing another one of these rallies. Let's see what it can turn into. The best thing would be for pull back down towards 15, shake some more people out. We don't want it to go all at once. It's easier to trade when it rallies, pulls back, and got to listen to the message of the market. But it's still saying guilty till proven innocent with that declining 5-day moving average. The financials had actually a pretty decent day when you consider that Citigroup was down as much as it was. So Citigroup, yesterday I said that a lot of people look at it and say, look at that big volume. That's the biggest volume it's traded in X number of years or whatever. And big volume tends to peak at turning points. The problem is you only know after the fact because again, we did see a much bigger volume day. I think what was that, billion shares here today. So yesterday we saw about 700 million or so, and I'm just estimating. Today looks like over 1 billion, and the stock finished significantly lower. Here we see that on the 10-minute time frame, Citigroup is still making lower highs and lower lows. It wasn't able to rally with the rest of the market, and that's pretty impressive actually that the market was able to rally without Citigroup. I was commenting in Twitter that I thought maybe the financials could get going if Citigroup could get back above the daily VWAP, that it might help the financials, but the financials went without Citigroup, so that's pretty impressive to me. But what's not impressive is the fact fact that we're still in a primary downtrend. We're down 66% year to date, 23% this week. It's just been a smash in here and deeply oversold. It's bouncing, and we've got to just look at it as a bounce for now. It's tough to imagine that we're going to revisit these levels again, but the market has a way of surprising. So defense is the strategy. That's what wins the game, to keep you in business for the next day and the day after that, to be able to take advantage of these fantastic rallies. The daily VWAP broke here late in the day, as well as the midday resistance. Not quite, it took a little bit to get it going in here, but then it did rally nicely, and very sharp move higher. The leveraged ETF in there, by the way, is UYG, which there's a triple one as well, but the UYG is $3.40. By the way, some of these, the triple leveraged financial one. Look at the volume in these. These are great new products. 8 million shares for and they've only been out for 3 weeks or so, 2.5 weeks, but they're very dangerous. So I would say if you're going to trade leverage, stick to the UYG in these financials. We're still in a downtrend. Let's take a look back at the XLF. Actually, we're still obviously in a downtrend. We've got the declining 5-day moving average. We've got the lower highs and lower lows. Deeply oversold. So we're getting a bounce. Let's let the market decide what it's going to turn into. It's easy to imagine that they could run up to at least these prior support levels, then maybe pull back and then get another thrust higher. We'll see. People asked me during the day today, how come you're not trading the short side? I have been trading short side. In fact, I was trading Citigroup short yesterday. I had some SDS trades today, quid trade, and that sort of thing. But the easier money seems to be made on these rallies. The downward moves are a little bit choppier, but the upward moves are the ones that are making the best, the fastest gains, basically. And obviously the financials are a group with major volatility, big volume, and a lot of fast movement in here. You got to be really quick to be able to make money in this market. I was buying calls early in the day in the queues, and I got rid of those. Took a $200 loss. These are some of the trades. In a QLD, I made $84 in that. SDS, I was up $452. The UYG, $585. But it's not. This Twitter thing kind of I'm debating, because it's not what I do with the information that I put on my website. What can you do with it? My trading results, I'm going to have good days, I'm going to have bad days. Some days I'm going to say good things on my blog and I'm going to trade just terribly. That's the nature of trading. The fact is, it's not how I trade, but what can you do with the information that I provide? That's where the value should be. Obviously, my results have nothing to do with your P&L. The S&P 500, though, this week we had seen the spiders come down below the lows from 1992. That's an important thing, I think, technically, that we scared a lot of people by getting under that level, and by testing these 1997 lows that going into these 1997 area here. So the SPY obviously remains in a downtrend. We've got an important level just ahead above at 83.30 or so. If it can get above there and hold above there, maybe we see that the sellers, that was the exhaustion. That's the bear trap rather, that leads to a move above this level, a pullback, and then a run up towards that declining 50-day moving average. The shorter term time frames are not supporting that scenario yet, but we have to be aware of all potential scenarios. This again is that 82 level. 82 and a half, that's going to be important. Hopefully we maybe run up to it, pull back. You could even make a case that maybe we're going to make a shoulder here. And again, these inverted head and shoulders patterns, we've been seeing them potentially form all the way down. What we want to see, though, is that the neckline has to be breached in order to take a trade based on it. We remain in a deeply oversold bear market. I think that the better opportunities, though, are, at least for my personality, on the upside with very strict money management.